Yes, I'm Simon Nursey, and I run derivatives trading at QCP Capital. QCP Capital is a digital asset trading company, and we offer spot, options, and structured products pricing and execution for our customers. Our customers range from high net worth individuals through to crypto funds, foundations, all the way up to large institutions and macro hedge funds. Our speciality is market making, block trades, and we are the #1 global market maker for crypto options. So before I joined QCP, I was running FX options trading at Standard Chartered and BNP Paribas, and I've got a few years history there before I moved over. Mostly our trading is focused on market making on the major exchanges for crypto options, and our objective is to provide liquidity and grow the overall industry. It's exciting to trade crypto volatility. Compared to traditional markets, the volatility level is much higher and the market moves much faster. We typically trade in dog years in crypto. So one crypto year is around 7 TradFi years. So in my last 3 years of trading crypto, I've seen quite a roller coaster of markets, up and down, and everything's happened. Well, we're particularly excited by the whole DeFi space. We're heavy investors into that area, and we think that's probably the most interesting part of the industry to the broader financial markets. DeFi allows us to automate in a safe way a lot of the processes that are currently very manual or centralized in the TradFi space. So, for instance, we work with a lot of the doves, or the DeFi option vaults, to provide liquidity. Because we find that they're an excellent way of distributing prices in a safe way to a broad range of clients. That's very efficient. We're also keen investors in DEXs, the decentralized exchanges, and a lot of the infrastructure there. Clearly, 2022 was a watershed year for crypto. We had a lot of very significant events. But the industry's, grown up a lot since then. So now we have available a lot of the institutions that we rely on in TradFi, and they've been rolled out now. So, for instance, we now have the ability to keep assets off of the exchange in custodians like Copper. We have a lot more regulation and regulated entities involved in the industry, and the rollout of ISDAs and CSAs and these sorts of institutions have been is much broader. So I'd say the crypto in general looks radically different to the crypto that we saw a year ago, and is significantly safer now. But of course, we still have to participate it with eyes wide open as to the leading edge of a lot of these assets are. Well, I think that it's quite obvious by now that crypto is not going away. It's here to stay, and as an asset, it remains interesting for asset managers because of the diversification it provides, because of the high returns provided by the broader retail participation, and because of the scalability with technology and the whole ecosphere that's associated with that. So I would say that it should be part of every asset manager's portfolio in some small way in order to participate in that field. And hopefully at QCP we provide the tools with which to create that exposure in a safe way. Oh, well, you know, it's great to be back here in TradFi I'm a crypto immigrant, so it's nice to be able to come back and share some of the opportunities that we have in crypto, but also share maybe the real facts behind it, as opposed to the sort of the headlines that we're all very familiar with.